Welcome to Seeking Alpha's Alpha Talks Editors Roundtable. What moved markets this week? This week ending Friday, February 12th, 2021. A week that saw a precipitous rise in risk assets across the board. The riskier, the better. We'll get into the winners and losers, but suffice it to say that Bitcoin had a huge week. Marijuana stocks had a huge week for about 3 days, and then they sold off. There was a lot of news around IPOs, some M&A thrown in there as well, and of course, earnings. So let me introduce the somewhat short-staffed panel for this week's episode. I am joined this week by Kim Khan, senior editor here at Seeking Alpha, and Stephen Alfer, managing editor of Breaking News. I am your host, Nathaniel E. Baker, senior editor of Strategic Contributors. Brad Olison is out this week. We were hoping to get Jason Aycock as a guest, but technical limitations on his end have unfortunately prevented that. Kim, why don't you get us started on the big picture and what caught your eye this week?
Well, it's been a bit of a strange week. I mean, I haven't seen a week like this in a while in the markets, where it's just the broader market's been so indecisive. You've seen this very, the S&P settling slightly down, then moving slightly up, and the direction just hasn't been there. And since the pandemic, we've usually had days where there's been some conviction somewhere, either like going with the mega cap stocks more defensively, or going into the reflation trade. Someone has taken over either up or down, but it's been drifting a lot. And that's the same thing has happened really in the bond market. It started out the week, Sunday overnight, the 10-year hit 1.2% that's the highest level it's seen in a year. Then slowly drifted back down. We had a CPI data that showed really actually no inflation gaining any traction right now. And then Jay Powell coming out and doing his best to say that there was no actual inflation, and also that the Fed's not going to pull the plug on any asset purchases, just trying to assure everyone they're back down, but they're back up again now, about 10 years, about 1.19% today. So yeah, very indecisive. We've seen a lot of mixed sectors going back and forth, but not a lot of traction.
Yeah, let's get into the rates discussion in a little bit, because I think that's pretty significant here as far as the broader future direction of the market over the longer term and where that's concerned. But first, I do want to go through some of the winners and losers here, because it was a lot easier to find winners than losers, I can tell you that much. And you mentioned the S&P and the Dow, which are up slightly now as we record this at noon on Friday. Cryptos are up big time. Bitcoin is up 22%. Crypto stocks, Riot Blockchain, 87% higher. Marathon Patent Group, stock symbol MARA, is up 64%. Grayscale Bitcoin Trust, GBTC, it's up 27%. Then we had, Semiconductors also turned in a strong week. KLA, Lam Research, and Applied Materials all up about 10% each. And don't forget the vaccine stocks. We had Inovio Pharmaceuticals, stock symbol INO, which rose after an Oppenheimer upgrade. Nantic West, I don't know how to pronounce that, but the stock symbol is NK, received FDA approval for phase 1 of its T-cell based COVID-19 vaccine. And that has been going up. And don't forget also the Wall Street Bets crowd still making themselves heard. The social media, what I'm calling social media pump stocks, one of them that I noticed this week was China Liberal Education, stock symbol CLEU, up 145%. You would think China Liberal Education might be a bit of a oxymoron, but who cares, because the stock is up big time. And then also IPOs, don't forget, I mentioned Bumble, up 70% after its offering. Okay, but on the discussion of rates, and this is where I want to bring you in, Stephen, is we saw inflation flat at 0.0% this week that it came in, the CPI. And Powell has been so far consistent saying he's not going to touch the dial there. Spigot's going to stay on full blast. And nevertheless, the one thing that we look towards that has kind of been common in bursting all previous asset bubbles is higher rates. You have some views on this, so let's hear it.
Yeah, I mean, speaking of long-term rates first, which the Fed ostensibly doesn't control, although they may try to. I think everyone who's interested in long rates should pay attention to Hoisington Investment Management. They were out with their quarterly letter recently. It seems like a rite of passage every year for, this is the year the now 32 year bond bull market ends, right? And, rates, economic growth's in place. There's an asset bubble going on. Surely long-term treasury yields are going to rise in a big way this year. And once again, that's kind of the general prediction again this year. And the folks at Hoisington, Van Hoisington, Lacey Hunt, now for most of my lifetime, seemingly 20, 30 years, they've been bulls on long-term rates, on long-term treasuries, and they remain so. So all the bond bears, they should go over and read that. And their argument basically is that we're a heavily indebted government and society, and they can go back through any number of times in history and show that that's a bound on growth. And can fiscal stimulus give us a short-term boost to growth? Can monetary stimulus do it? Absolutely, but it's not good for long-term growth. It actually slows things up even more. So they remain quite bullish on long-dated treasuries, bearish on the direction of interest rates. So I found that super interesting that they haven't changed their tune there. And as far as, like you said, what's everybody kind of knows things are a bit frothy right now. I don't think there's any question about that, but what's the catalyst that's going to end that? And often it's a rise in a tighter monetary policy. And Powell's made that clear that's not coming anytime soon. So while certainly, the market's, due for some sort of setback, kind of the long-term, bullish thesis on stocks, I don't think has gone anywhere as long as the Fed is on the sidelines. Yeah, that key point there, the Fed being on the sidelines. Now, remember, Powell has changed his tune here before, right? He was tightening rates back in 18, and then when the market kind of fell apart on him, he changed his tune very quickly. Right. Is there reason to believe he could do the same thing if things get even more frothier with the cryptocurrencies and the SPACs and all these other, crazy risky assets being bid up to the moon, to use a favorite Wall Street Bets nomenclature there? That's the question. And then also don't forget that at some point there is going to be a successor to Powell as well. So that's something to look out for. And Fed officials change their minds a lot quicker when they're going from hawkish to dovish than they do from dovish to hawkish. So I don't expect a turn on the dime like we saw in 2018. If anything, it's gonna make Powell even more reticent to tighten. Although it doesn't take a lot. You don't have to go from 6 to 0, right? You can go from 0 to 0.5, and that may be enough to spook markets. And who knows? Absolutely. They may try that. Absolutely. All you need is the change in trend, I think. Yeah. And maybe not even that. They maybe even just some noise in the minutes about, we're looking at tightening this, and something like that could spook markets, and that absolutely may be enough to at least prick part of the bubble and get things simmering down here a little bit. Anyway, that's something for us to look at. All right, let's move on to the next section of the show where we discuss favorite articles from Seeking Alpha that we have read, edited, perhaps even written. And let's start with you, Stephen. Really the series of articles is kind of the corporate move, the growing corporate move into Bitcoin. We started the week with Tesla disclosing that they had purchased, or that company had purchased $1.5 billion worth of Bitcoin. It was preparing to begin accepting Bitcoin as payment for their cars. That sent Bitcoin higher by about $10,000 over, or 25% over a period of a couple of days, I believe, to new all-time highs, north of 48,000. Then you had MasterCard is going to allow its merchants to accept Bitcoin. You have Bank of New York Mellon, which is a very kind of staid old custody bank, now saying they're gonna do custody services for Bitcoin for their clients. Those are really huge pieces of news. And on the other hand, you have somebody like GM which released earnings this week, the CEO Mary Barra said they have no interest in putting any of their treasury assets into Bitcoin. You had Uber out with earnings saying they looked at it, they have no interest in doing it. So this is a question every corporate chief, every CFO is going to be asked from here on. You know, with your excess cash, are you planning on putting any of it in Bitcoin? And I'm reminded of the Japanese property bubble of the late 80s. A little bit, you know, when you had a Japanese widget manufacturer kind of abandoning their business to invest in Tokyo real estate, right? And you can imagine those guys being asked on their quarterly earnings calls. I don't know if they do quarterly earnings calls. You know, are you buying any office buildings in Tokyo this year? To, you know, some guy who's making windows, you know, in Nagasaki or something. And I'm reminded a little bit of that. So that, you know, it's kind of bubbly, but, you know, if I was a Bitcoin long, and I'm not worried, you know, I'm not worried when Mary Barra doesn't want to buy Bitcoin. I'd be worried when Mary Barra does want to buy Bitcoin. And, you know, maybe the Q4 2021 earnings call, which comes next February, maybe that's when, you know, maybe she'll give in and say GM's buying a Bitcoin mining operation for all I know.
All right. Interesting. Kim, what about you?
I've been, you know, watching the retail investing story move ahead, and one of the most interesting things we saw was the Justice Department now looking into the retail side of what happened. You know, subpoenaing information from Robinhood, other brokers, social media, to look into possible market manipulation of how these, you know, stocks, you know, went through the roof. You know, regulators are also looking at you know, specifically at silver and SLV, the ETF for silver, and how whether that was coordinated. And so now it's now gone from, you know, there's still this hearing coming up on February 18th in the House Financial Services Committee where, you know, Melvin Capital and will, you know, appear, and others. And so that's still going on, but it's kind of switching a bit from, you know, protecting the little guy to let's see what the little guy did to, you know, make these stocks go through the roof. And so that's got to be I mean, there's got to be a little nervousness on the Wall Street Bets board.
Right. And Kim, you and I were joking this week when the news came out, you know, Roaring Kitty, who's the Reddit guy who kind of started this whole GameStop trade. He recognized all these shorts, and he said, there's some interesting investors getting into GameStop. Let's buy it. And he kind of started it. Roaring Kitty's probably going to end up penniless after all this, after his lawyer's fees, while 0.72 in team buy new houses in the Hamptons. So yeah, it's going to be the little guy probably comes out on the bottom of this one.
Yeah, though maybe not Roaring Kitty. He'll probably write a book, which will be made into a movie, and he'll probably do okay.
Just to pay his legal fees.
Exactly.
Yeah.
Yeah.
That's true.
Yeah. And in that, with that in mind, my favorite story was this piece by Andrew Walker of Rangeley Capital, Chris DeMuth's firm. And he takes a look here at the SPAC craziness, specifically Churchill Capital Corp 4, a deep dive into what he calls a mania. He doesn't quite come out and say it, but, well, actually he does. He says it's a little bit insane. One could think by reading this completely reasonably that it is perhaps a lot insane. And basically the long and short of it is there's no reason for a SPAC, specifically this one, to be trading as high as it is. It's just another indicator of a very frothy market, of too much liquidity in the system, and this party will end eventually. Buyer beware is the last word in his piece, and this will come to an end at some point. Maybe. No, it definitely will, according to him and according to everybody else. We'll just have to see when.
And it's particularly interesting that Walker would write that. He's, as you mentioned, he's from Rangeley Capital. DeMuth and Rangeley are major bulls on SPACs. They own tons of them, but they get in usually at the IPO price of $10 each, because the downside is basically zero and the upside is more or less unlimited.
Yeah.
So yeah, if Walker's speaking ill of a certain SPAC deal, we should definitely be wary of that.
Chris, that concludes this week's podcast, videocast, and YouTube. Speaking of YouTube, if you are watching this on YouTube, please click the subscribe button to get more videos of this type, and do like it if you are so obliged. If not, feel free to supply comments as to why you do not like it. And you can view these videos on Seeking Alpha's website every Friday afternoon around 4 p.m. That URL is seekingalpha.com/videos. The slightly longer audio version of this airs on Saturday morning through the Wall Street Breakfast. I had to make sure I said breakfast and not bets. Wall Street Breakfast podcast account. Subscribe to that and you will get it. And of course, thank you all for watching and listening. And we look forward to speaking to you again next time.